Hi everyone, please check the pinned comment and let's have a look at my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the two bearish ones where we are looking for a three-wave structure in a ABC, which is a zigzag, a 5-3-5, where then inside this wave B, we are looking for another three-wave structure in a WXY, of which inside this wave X, we again have a three-wave in an ABC, which is a 5-3-5 wave move, where then the second leg of this wave C is close to be finished, if not then already finished. One of the important targets we have was the liquidity at 26.5k, which was the low over here, which actually just before recording now has been taken. So potentially that can be the fuel for a move to the upside. Now, yesterday we were talking about a V-shaped recovery. A V-shaped recovery is price moving to the downside, immediately moving up very quickly, ranging and then continuing. That is something that is very rare, which I also explained in the video yesterday. It's more common that price is actually going to take this low again. So I was looking for, hey, and also saying price might move to the downside once again to not only take this low, but then maybe move a little bit lower to 26.5k to take this low as well. And that is what happened at the moment. And then, well, we have the potential trading setup, but I clearly wrote here risky versus safe because we are in a downtrend. From an Elliott Wave point of view, could one trade this? Yeah, but the more safer option is to wait for proof that price wants to move to the upside. That maybe a break of market structure, maybe a move to the upside, a move down, and bullish CVD divergences. Whatever your strategy contains, whatever your plan is, something that is in addition to the Elliott Waves scenario. Now, I know many people that are trading Elliott Waves by itself, right? That's absolutely fine and absolutely possible. But personally, I use Elliott Waves for direction to either the up or the downside. And my trading strategy is actually not Elliott Waves related. It is separate. I have a personal developed trading strategy with certain entry requirements that need to be hit before I would potentially enter a long over here. So from an Elliott Wave point of view, yeah, it could be an entry. It's more risky to just enter here, stop loss somewhere safely below, looking for upside. And my strategy is more on the safer side, I suppose, where I wait for certain entry requirements to be hit before I then potentially look for a move to the upside. Because in this scenario, we are looking to the highs where we still have a triple top over here at 30k, which is very interesting, as well as the blue target, the blue box over here between 30.2k and 30.4k. So that is something to look out for then potentially a move to the downside in a wave C. If we then go to the very bearish scenario, which is the final bearish scenario I like to show you, we're thinking about a 1-2-1-2. Now, there's a couple of reasons why I do not like this scenario. But in this scenario, we're thinking about a 1, WXY, and then a wave 2, and then another 1, 2. And this has to be a wave 3 of a wave 3 to the downside. So it's the white 3 of the blue 3, which should be by far the most impulsive wave to the downside. So 3 reasons why this is for me an alternative scenario at the moment. First of all, this over here, wave Y, didn't go above wave W. I actually wrote it down, wrote it wrong here. But this wave Y didn't go below wave W. Now, that does happen sometimes in a WXY, but it is not necessarily something I like to see. So usually in a WXY, the Y wave will end above the W. But it is not necessarily a must, because one of the targets of a wave Y is actually the 0.618. As you can see, the 0.618 clearly is below wave W, and clearly the high over here passed the 0.618, but it just shows that the 0.618 all the way to the 1.236, which is of course above the highs that we have, 1.236, is a valid target for potentially this wave Y, right? So that's a big target area. So that could be a wave Y, but it's usually not something I necessarily like to see. I would like to see Y taking the high of W, but this high over here is actually lower than W. Then secondly, this is another 1-2 before then a 3 to the downside. But with a 1-2-1-2 setup, I prefer to see a 1-2 and then a 1-2 before continuation to the downside. So the second one takes the low of the first one. But in this scenario, this second wave 1 did not take the low of the first one. So that's also not something I like to see. I like to see a bit of like a diagonal structure and then a 1-2, 1-2, and then eventually boom, moving to the downside, right? But that's not what happened. And then lastly, if we look at the volume, then what do you see, guys? you see over here, if this is a wave 1 in blue, 2 in blue, and this is a wave 3 of 3, so this has to be a very impulsive move to the downside in a wave 3 of 3, you want to see volume increasing massively. Now, keeping into account that this spike over here was news related, so we can actually scrub that off, we have to look at the volume around that spike. You can actually see that the volume was higher at the first move to the downside over here than in this second move to the downside over here. And if this is a wave 3 of a wave 3, you want to see volume increasing massively, right? You want to see, boom, go up. Of course, we have a spike, but if you look at the candles around it, not very impressive at the moment. And if this is a 1, 2, and this is wave 3, so this is another 3 of 3 of 3, if you know what I mean, right? Holy moly, the volume here should be spiking, but as you can see, that's not the case, right? So yeah, volume is slowing down, which is more a wave C or a corrective pattern, I suppose, on the volume, instead of an impulsive pattern on the volume. Because with an impulse, this is 1, this is 2, and then in a wave 3, if this is all part of a wave 3, you want to see volume increasing to the upside with the price moving to the downside. So that is why this is an alternative for me. The more bullish scenario is that the correction is finished in a WXY, where this is then an ABC to finish things off. Most common target area for a wave C in an ABC is between the 1 and the 1.236. But as you can see, price has now passed this 1.236. Not necessarily a problem, as the maximum target for C is the 1.618, and we are still hanging above the 1.618, so that's absolutely fine. But it is something to take into account, and that also makes me think that this correction is not yet over. I'm not too keen yet on maybe this being the end, for then continuation to the upside and much higher prices, basically. So yeah, this yes, it could be the low of C and Y, but it all depends on how price moves to the upside. If we move up very, very impulsively, then yeah, okay, correction can be over. But if we move up in 3 waves, of course, that's not very bullish. So we have to wait and see what price does from these lows to the upside, or if it just continues tanking, right? Because of course, in this scenario, price continues moving to the downside. So you know, we now took the liquidity of the low over here, and we have to wait and see how price is going to react. Then we have this scenario over here. Not a big fan, as you can clearly see, because of my lack of TA over here. But this is then a 535. And the reason I'm not a fan is because of this structure over here. So if this is an ABC, some people have a triangle over here. Now, first of all, the waves inside this triangle do not follow the triangle rules of Elliott Wave. So I don't like a triangle. So I would then be looking for this to be a W, X, and then a Y wave, which is a complex structure. But then again, wave Y did not take the high of wave W. And also this wave Y is a channeling structure to the upside over here, which looks to be a WXYXZ, a WXYXZ, which is a pattern that can only exist in a wave B, in a wave X, or a wave 4. And this has then, it has to be a wave X or a wave B, which then is the middle of something. And if this is the middle of something, it means you need another leg to the downside, which is then what we got. But it also means that this wave B cannot be the end over here, because this structure in a WXYXZ cannot end a wave, which then is in this case the end of a wave B. So yeah, that is quite interesting in this particular scenario. So that's why I don't like this wave B being put over here at this particular high, and this then being the low of wave C. Besides, if this was a wave C, most common target area for a wave C is down here between the 1 and the 1.236, which is between 25.9 and 25.1K. And then finally, let's have a look at this impulse over here. So the impulsive structure that we have right now in front of us is then a 1, 2 reaching the 0.5, absolutely fine for a wave 2. Then we have a wave 3. Then we have a wave 4 reaching the 0.5, that's absolutely fine as well. Before then, a quite messy wave 5 to the downside, and then likely a 1, 2, 3, 4, 5, or maybe a bit of a range, and then another spike down to move to the upside to take this low once again. But it's a bit messy. Now, this wave 3, though, is not reaching the most common target of a wave 3. Actually, this wave 3 is longer than wave 1, which is a minimum requirement. But this wave 3 did not reach the 1.618, which is usually a common target for a wave 3. So if I put that on the chart, you can actually see the 1.618 over here is below the low of that wave 3. 1.618, wave 3 over here. Usually the 1.618 is hit if it is an impulsive structure, but in this scenario it's not. But wave 3 at least is not the shortest wave, which is very important. And if we do look at the volume, we can at least see that volume was at least higher in this wave 3 than it is in this potential wave 5 at the moment. However, that is only looking at the spike, because the average volume of this wave 3 was actually quite low to the volume that we have over here. So yeah, 1, 2, 3, 4, 5. You can count it like this, and we have to wait and see if this is correct. Of course, on the medium time frame scenarios, we both have our bullish and our bearish scenarios, and I also explained on how I personally trade, where I mentioned, hey, Elliott Waves for me is a bias. It is not an entry, like it's not my actual trading strategy. I have a separate personal developed trading strategy that I made over the years with entry requirements, exit requirements, everything in order to trade potential long scenarios from the lows over here. So that being said, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.